Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and I'm joined today with a very special guest, someone who has been a real source of information here on Crush the Street in the past. We talked to Dan Kurz in the thick of the corona illness crisis, and when we were in lockdown orders, the world was in the thick of that. And, Dan had a lot of questions and concerns about what this was. It was still kind of new to us in many ways, but he still questioned it. And he still said, hey, we need to be very careful about the degree of freedoms that are being stripped from us as people around the world, Americans. And sure enough, here we are. We are starting to see that second wave of media, pummeling fear and a lot of deception and continuing to keep us in this fear and lockdown mode. And I want to get into that today. I want to get into how that will play into our money as it pertains to our money, as it pertains to our freedom, what's going on in the markets, what's going on in precious metals. It's all intertwined. So Dan Kurz of DK Analytics. Dan, thank you so much for coming back on Crush the Street with me today.
Thanks for the invitation, Kenneth. Pleasure to be here.
Well, let's talk about where we are as a society since we last talked as it pertains to the virus, the lockdowns, maybe your opinions as they were a couple months ago, and then maybe have they evolved from where you were then and where we are now, seeing what we're seeing, and as the facts start to come out about the virus and the true fatality rates continue to show themselves?
Sure. Well, that's a very broad brushstroke question. Let me start with something I heard from a treasured source by the name of none other than Victor Davis Hanson, who I'm sure you're also familiar with. He was interviewed recently, and this might be a good lead-in. And he noted that in March, in the early days of the virus shutdown, lockdown, in other words, in the early days of it becoming a reality in terms of a threat and the policy response to it, he said that Americans broadly at that point thought that 40% of the country, about 40% of the Americans thought the country was headed in the right direction. And that held on for a month or two. And now it's down to 20%. So that's a very, very sobering number. And, when you don't like things, you tend to vote for change. That change in this case might be electing Joe Biden and bringing the Democrats into full power in the Congress. So in essence, this is also at the end of the day a very political agenda. I think the proof is in the pudding. You mentioned a potential divergence between, well, you said the second wave. Yeah. Well, if you're going to have people locked down, students, young people that have according to CDC, all right, it's not my numbers, this comes from the CDC, like something like a 0.001% chance of dying from this. Yet you insist, I see it in Lee County. They wanted to shut down schools. They've extended it. They wanted to keep everybody virtual learning mode. And in essence, we're now at the point, Kenneth, where we have the sharp divergence with infections going up like crazy. But nationwide, deaths, according again to the CDC, dropping, in fact, the latest week on record, July 18th, which will be increased as more data comes in. But that number is down 94% from the high point for the week, nationally, America-wide, as of April 18th, all right? And even if more people unfortunately succumb to this, and again, I don't want to make light of this in any way, shape, or form, but we have spikes going up. We have people out and about, for at least for a little while, but they're threatening to shut everybody down again, right? You know the story. And I think it's a politically driven story. Frankly, what's important aren't the infections. To the degree that those infections actually build herd immunity, that is, young people are out and about and help kill the virus because their immune system won't let it survive and won't let it be transmitted, that's a good thing. But we have this second wave to a large degree because we artificially shut down the whole joint. If we hadn't have done that, we would have gone through this. But the big takeaway is that no matter how they take the numbers, whether it's in Florida that I could also talk about, America as a whole, you've got a divergence between spiking new cases and a sustained sharp drop off in the actual coronavirus death rate. We also know that the CARES Act actually incentivized hospitals to tag deaths as coronavirus related. And these hospitals got shut down, couldn't do other procedures, and were incentivized to label it as such because they're all hemorrhaging. I mean, even famous hospitals, including the one up in Minnesota, which escapes my name for the moment, I'm sure you know it, they have been forced to dramatically reduce personnel, shut down. So this was also by need. Hospitals had to label it this way. So what I'm saying is, I think just like with CO2 and other things, we move away from pure science to a very political aspect, and that doesn't really make for good policy for the majority of the people.
Absolutely. Well, let's talk about that a little more. Dr. Fauci has become the figurehead for the authority on this infectious disease, and his leadership is, highly questionable depending on, what media source you're following and whatnot. And it's interesting to see Trump's dynamic with him. But when it comes to, this whole mask situation, I feel like the masks have been symbolic of almost, let's just say, submission to policies, government control, when even Dr. Fauci said, this is not going to really help in the transmission of this disease. It's minimal. And so maybe your thoughts on masks, what your opinions are on them, and also any thoughts on Dr. Fauci.
Yeah, well, let me do it in the order you just said. First of all, masks. Let me ask you a fundamental question. Maybe it's a rhetorical one. But if actual wearing of these masks, whatever type they are, and there's various issues related to what kind of mask you wear, but if in fact wearing these masks worked so well, then why are people that are concerned about transmission of the disease and are wearing the masks concerned about others that don't? Because supposedly that mask is going to shield them. So if it was really an effective guard, why would they be concerned about others not wearing masks if that mask is supposed to protect them from getting the virus?
Well, let me jump in there, right? They're also saying that if you wear the mask, you're doing it for somebody else. You're not going to spread it to someone else. They always say that it doesn't protect you, it protects other people. So if everybody does it, we're all in this together. So I'll just throw that out there as what the argument would be to that.
Well, let's take that at face value. Let's go into the Asian culture. I'm speaking to you from Switzerland currently. There's Asian people all around me here that I see. I know from what I've read, and so do you, that Asians have been one of the most ready people to wear masks. It's also culturally more accepted. And if that really helped to put this virus down, why is it then that there's also an increased amount of infections across many Asian nations if this mask really worked? So I think it's more of a political thing. I think it's more of a submission thing. And if masks were really that good, then we would have seen a lack of a second wave in Asia where they were wearing masks already, partly as part of their culture to some degree, or I don't know, let's make some kind of fashion statement, and from that perspective, it doesn't really hold much water. Moreover, hardly anyone talks about what are the negative impacts of wearing a mask. Here, a lot of the Greens talk about CO2 being a pollutant, which of course it isn't, it's plant food. But if you're continuously inhaling CO2, you have a weaker cardiovascular system, or you exhale humid, hot breath into a mask that isn't the right mask, that you stick into your pocket, that you have to scratch your face because it itches. to what degree are you actually helping to prevent the spread of this virus or anything else? That might be a source for actually the thing to flower to a degree that it otherwise wouldn't. I mean, look, Dr. Fauci stated early on, and so did the World Health Organization, that the average masks worn would not do this job that they now proclaim they do, or they will, or they must. So what's this 180 about? Can that be explained away? I think there's such a huge body of evidence out there that masks are at best highly questionable, that when you force them upon people to this degree, I think it's also a political agenda. How much can we, in essence, determine how people should lead their lives, dress code, if you will, and to what degree does that suggest if we can control them through fear, notwithstanding sharply reduced death rates from this virus, then what else can we do with it? It's Orwellian in nature, and I don't think the science holds up. And the initial statements from Fauci and others, and speaking of Fauci, I mean, this guy you probably saw was caught at a recent national game not wearing a mask, talking with his sister and his brother or his wife, and then had a lame excuse. We both know that a lot of the high ups, whether it's the governor of Michigan, the governor of California, the governor of Illinois, various mayors, they end up getting caught not practicing either the mask wearing they have tried to push on everybody else or the social distancing. So if it was really that serious, why aren't they following up and taking their own medicine? That's another thing that I think deserves attention. In other words, it's more of a control thing than it is actually a health consideration. And again, if numbers were so great, why are we still talking about this? If so many people have been wearing masks, including in New York State, why do we have more infections? The reason is because we were artificially shut down. In prior pandemics, just the aged and the weak and the elderly and those with diseases and immune system problems, they were logically protected. But this time we try to shut down the whole joint, and it has very, very serious, not only political freedom related implications, in other words, unconstitutional, also in gathering in larger numbers. Look at Trump now giving up the Jacksonville, the Republican convention. I mean, I think he is caving to the pressure of Fauci, and Fauci, I think, is a very political more than a scientific guy. And if we go this direction and Trump doesn't make a stand for taking personal responsibility, look, people die. The prevalence of death of this is akin to dying behind a steering wheel in a car. All right. You've got a 0.01% global death rate, right, that this virus has caused. In America, it's a bit higher. It's 0.03%. But that's still very small. In America, on average, 7,708 people die a day, CDC statistics, and that means something like 50,000 a week. And I'm not saying this coldly, but if we're going to use numbers, well, then let's use numbers. If you compare that with a recent death toll across the United States last week of something like 1,300 and counting, then we are majoring in minors, and we're causing a lot more harm to the overall economy, to the hospital system, to the healthcare system, to schooling. And who keeps getting the money? The teachers that won't go back to work, the bureaucrats that force these unconstitutional diktats upon the rest of us. They have their cushy jobs with superior salaries and benefits, and are in essence turning the economy into a corpse in the process, and freedom along with it. So I think it's really very, very, I always wonder if you told the Democrats, and the rhinos are on board here, you bring this big subject. Look, we've got the rhinos that are scared of their own shadow. We got the Democrats that want control of everything at any and all expense. They already run Hollywood. They run the media. They run all the bureaucracies. They are itching to just run the whole joint and turn it into a one-party country. Let's be honest, right? And if the corporations, if the mayors, if the governors, if the rhinos, the Democrats anyway, both bureaucratic and elected, but now corporate America is in essence buying into this whole scheme as well. In essence, in a very drastic way of saying it, they are acting as if Black Lives Matter wasn't an anarchist, racist outfit, which they are, in my opinion. So if they bow down, including Delta, I got a letter from Delta, Ed, you've got all these corporations that in essence are telling everybody we're all bad, we have racism in our blood, we need to kneel. And if they also help push us off the constitutional edge, then they're not going to do well at the end of the day either. But they're making money right now. You know, with NFL, with basketball players, they cheer on Black Lives Matter, yet at the same time, the Chinese are raping Hong Kong and they don't say a word. So they're fake, right? I just think it's a very destructive, unfortunate situation. Maybe that's.
It's so true. And, you know, when you visit other countries, and again, not to just throw shade at other places and ignore maybe what goes on here in the US, but I mean, there is so much racism going on around the world that nobody wants to talk about. It's all of this, you know, America is bad. Let's just shoot ourselves in the foot. And, you know, we have so much to be ashamed of this country, but then no one wants to talk about the extreme racism that's going on around the world that people just, it's not political. No one cares about, no one wants to talk about. And it's so true. So a lot of this is politically driven and it's not helpful. It's not helpful for people to get out of their situations because it's toxic, because people are trained to think negative thoughts, to not be growth oriented, to not think positively, to get out of their situation, right. But they blame it on injustices and many other things that are out there and ignore just ways to advance their lives forward.
You know, Kenneth, and we might have discussed this, I'll be very brief, but if America was truly a racist country, would there have been a civil war fought against the worst form of tyranny ever called slavery? Would there have been Reconstruction amendments? Would there have been civil rights legislation, which were all Republican based? Fortunately, today we have rhinos and not Republicans, but you know where I'm going. If America was so racist, would we have had a black president? Would so many leading cabinet members have been black? All right, and Hispanics are also moving up, and that's a good thing because you should base things on merit. Martin Luther King's famous, "Don't judge a man by the color of his skin, but the content of his character." That's the true way to avoid racism, not doubling down on fictions and reinstituting racism from a different angle. If America was racist, would a record number of marriages be interracial marriages? Would most of our professional baseball, basketball, football players be black and everybody loves to go to the games? I mean, would people of color try to get into America with record numbers if America was truly a racist nation? This is utter concocted BS. But worse, it's toxic because the politicians are buying in, the police have to go home, we have anarchy, destruction, violence, mayhem, deaths. This is not how you perk up an economy. This is how you kill it. And this is how you make it even more dependent upon the printing press, which then ultimately guarantees, if you have too much of anything, the total evisceration of paper money. We're rapidly going in that direction. And of course, the answer there, allocation-wise, is to think what preserves purchasing power over time. Every time nations have printed too much money, whether they have internal strife, whether there's a revolution, whether there's an external war, whether it's communism that moves in instead of capitalism, where we're rapidly going, in my opinion. One basic source of real money has always held its purchasing power, and that, of course, is gold and silver.
100%. Dan, and it's so many things to talk about there, so many things for me to respond to. But it reminded me, I turned on the baseball game yesterday. I didn't see any fans in the stands, and I'm just blown away again by how America has accepted this.
Yes.
We've become so conditioned to just completely throw out the things that we've done. I mean, I was talking to my neighbor, they're talking about questioning whether or not they want to send their daughter to Texas Tech and pay the premiums if a lot of their classes are going to be online and they're not going to get the experience
Yes.
of college. And it's true. Why do that if they're just going to watch it on a computer screen and sit at home and not get the experience of being out and whatnot? And obviously I have a lot of questions and concerns about college as it stands, but just to make the point of how we're being stripped of our normalcies
Yes.
for this virus that is just being so politicized.
I think, Kenneth, if you look at the virus, if you look at the ruinous trajectory of Black Lives Matter, Antifa, and other anarchist and I have to say racist groups, look, it isn't just Black lives that matter. For God's sakes, it's all lives that matter, regardless of your skin color, your creed, your religion. That's the whole point. So the problem is, as we go into this and it becomes more accepted and institutionalized, we ruin even more the pathetic state of both our inner cities, our infrastructure, the feeble attempts made to bring back personal responsibility, to have charter schools grow, because the public schools offer no solution other than mayhem and indoctrination in too many cases. I mean, they want to shut down what works for what doesn't. That's the whole problem in my view. And I think this is a very political look. Since Trump was elected, and I wasn't the huge Trump fan, but I will vote for him with more conviction than ever this time around, because I look at the alternative and it scares the living daylights out of me. Right? It really does.
Right now, Dan, I mean, the right and the left are so vulnerable to this economy. You look at how this COVID crisis affected the economy with the lockdowns. Everyone was like, okay, you're going to take away my ability to make money. Everyone's got their hand out for a government solution, whether it's PPP, right, government stimulus, unemployment. Yes. My goodness, that's running out here. I have tenants that actually are in Florida, not far from you. And they're going to be, there's some of them that aren't paying. Some are completely taking advantage, getting stimulus money, but not paying their rent because they are protected. And there's going to be a massive eviction wave that happens, I guess, depending on which states and, what local governments do to protect them. But my goodness, I mean, how much longer can this go on for, these Band-Aids, this stitching along of the system, both from the right and left, demanding a government solution? And I say that because I just feel like the risk of extreme socialism is there and more prevalent than ever because of the vulnerabilities that we have in our economy.
I fully agree. And in a broader sense, what you're also addressing is the continued reduction in property right protections that people, I mean, we have yield starvation. People that have bonds don't get paid jack. They often have negative real yields. We now have a new attack upon Main Street, upon small business. We know that the big S&P 500 companies always get bailed out. I've mentioned before and have written about it. In that sense, we've moved strongly, in my opinion, towards fascism, which is one form of socialism, where ownership still remains in private hands, but they do the business of they do the business of Congress, of bureaucrats, right? I mean, you got the United States of Goldman Sachs, you've got Wall Street getting bailed out, you've got big companies getting bailed out, so they get along with this initiative, which frankly is a free market capitalist, it's cronyism. But that doesn't help most people which are not in a position to milk the system along those lines. And these are people such as yourself, myself, others that aren't part of the huge money exchange. And as a result, if half the businesses in America, small businesses, feel that over time they have to shut down, including also because the government pays their former employees more to not go back to work than to go to work, including all these shutdowns and lockdowns renewed. Well, if you lose about half of your small businesses that employ roughly half of the people in a private sector, how in the heck can you have a growing, prosperous economy? How can you have social stability? How can you have happiness? You can't. But unfortunately, I think that's part of the agenda to, in essence, what was Obama's favorite line? He wants to remold or reshape America, all right, something along those lines. And I think that continues. And I can only define it as the pure opposite of constitutionalism, sound money, the Bill of Rights, free market capitalism, personal responsibility. It's called socialism. And there are various varieties. There's fascism, there's communism, where there's a less benign form. But we are moving to, in essence, take the incentives out of producing. And if you just throw money into it, you shut down businesses, you negatively impact supply chains. Why then? You're going to have a lot less supply at some point. And if you continue to throw all this money into the system, eventually you're going to get what you want as a central bank. It's called inflation. And we know that the only way the government has any chance of making its debt payments in the future is to inflate away the value of the money. So I think this sounds like conspiracy theory, but I think it's more conspiracy fact.
I mean, the conspiracies that we've talked about, right? The quote unquote conspiracies are becoming fact. I mean, look at the world we're living in, the extremities that we're seeing. I mean, the cruise ship just off the coast of California, just sitting there, and the lockdowns, and nobody in the stands at these sporting events, and just kids learning at home, 2-year-olds being forced to wear masks. The discussion of that, they're talking about keeping them in little boxes and everybody using their own supplies and not sharing, nobody interacting with toys at school. I mean, it's just absolute lunacy when you think about the kind of measures that we are discussing and actually attempting to implement. So it'll be a wild rest of the year, I think, as we start to see the PPP and a lot of these measures fizzle out, or they ramp it up. I mean, I think that's probably the likely scenario here. I mean, fundamentally, we have to assume that's going to go away. Stocks are going to come down and things start to reset. But you have to be open-minded to the idea that this is probably just going to get throttled up. And we could continue to see the inflating effect of that trickle into the economy, just as consumer demand has been notably strong considering what we've seen over the last few months. But let's talk about the stock market going back to, pretty close to where the highs were. Now, it's interesting that the financial sector has shrunk as a percentage of the S&P 500. It's a smaller portion than it was pre-COVID crisis. Obviously, we've seen the tech sector take off. The Russell 2000, a closer indication of mainstream, has not recovered the way we've seen, obviously, the NASDAQ recover. Yes. So let's just talk about that a little bit. What is it saying, and what are your thoughts on it?
Well, you mentioned strong consumption. Consumption's gotten a tremendous boost. I mean, look, we recently had the second highest level of Americans filed for unemployment benefits, including gig workers, of course, 32 million on, right? So we got a fundamental disconnect. We've got earnings for the average Americans under extreme duress. There's very little savings. So how can it be that we have strong retail sales? Well, it's government hands out checks with printed money, right? But that doesn't keep businesses going. In effect, it causes businesses to shrink because of renewed shutdowns, lockdowns, mask wearing, social distancing. All these things are totally unnatural, and I would argue in the vast majority of cases also unnecessary, but they are dictatorial. We're facing tyranny that is made possible by massive mainstream media propaganda where they talk about the cases, new infections, and not the plummeting deaths, right? Where they talk about overfilled hospitals, yet they don't tell you that for 3-4 months, those hospitals could hardly do any procedures. So how does this all come back into earnings? Well, if you look at the S&P 500 as corporate America, right, it's about 70% of all GDP in America is represented by the S&P, where they've been firing people and replacing them with either overseas personnel or with machinery. That's how big companies work, right? But even those big companies are showing so far, this was as of 2-3 days ago, that the earnings that are coming in year over year are down 46%. 46%. And some, you mentioned the financials, a lot of the financials have come out with barn burner estimate beating EPS numbers, or at least some, the ones that have come in. Those have also been involved, I would argue, with not only getting sizable checks themselves by availing themselves, including hedge funds, of stimulus payments, but because of all the money that's been handed out and the fees that they collect from it. But if we continue to go through the earnings releases and move from 4 or 5% to 20, 30, 40, 50, we ought to see a leveraged decline in earnings per share that exceeds the 44 or 46% so far tallied. You know that we're going to have Q2 GDP down between 45 and 50%. I believe that's a pretty good number. Well, if your top line, and that's all the GDP of the country is the company's top line in aggregate, right? If the top line goes down by just 4 or 5%, you already have EPS, the bottom line residual, that's maybe 5%. It already takes it on the chin. But by God, if we're losing half of our top line, and a lot of those costs are fixed, at least near term, midterm, we ought to have earnings drubbings here of 60, 70, 80%. So excuse me, if you take a look at the PE based upon trailing 12-month or past 4 quarters gap numbers by the S&P, right? Not directly from the horse's mouth, if you will. You're looking at about $100.30 per Standard & Poor's 500 share in the early inning of the second quarter, where the results are likely to go from bad to horrible, right? We're only in a little part of the earnings compression that we have ahead of us. And given the policy that we're pursuing and given the excesses that we have, it's not likely to make a rapid recovery, right? In other words, the 19 EPS high water mark could last for a long time. In that sense, let me bring you a comparative index or comparative decade. In 2005, the S&P 500 reached a pinnacle. It dropped over the next 3 years down to a residual that was only 20%, 18% of the 2005 high watermark. This is S&P 500 GAAP earnings all in, honest, right? To the degree that even those are still honest. It took 5 years or even 6 for the high watermark S&P 500 earnings in 2005 to be eclipsed. Now this time around, we've got a lot more debt. We're bordering on anarchy. We're printing money like never before. We're taking away property rights, either directly by smashing businesses or through the regulatory quagmire, despite Trump's efforts. Just take a look at social distancing, mask wearing. Who's going to go out and order a good dinner and have a nice romantic evening if you have to sit there in masks? Who's going to fly an airplane if, even though airplanes, and I flew myself recently, are one of the safest places to go, given all of the things they're doing? In other words, you're scaring the hell out of people, you're shutting down supply, and then you're throwing a lot of money into the mix. This is going to propel inflation, but not growth, not real growth. And we could have a 33 PE currently, based on 12-month moving gap EPS for the Standard & Poor's 500, but those earnings could get cut half. Now, investors are giddy because they know the Fed has their back. They know that fiscal largesse follows or includes monetary, so you got monetary and fiscal stimulus. But what happens if the laws of EPS impact the bottom line to a degree that instead of having a PE of 33, we're looking at a PE of 60, 50, 70, based upon current S&P 500 trading level, 32 odd, right? 3,270. Well, at that point, people are all of a sudden, and this is my bet, they're going to get a bad case of PE agoraphobia, where you could print and you could do fiscal, but if it isn't leaving positive skid marks on the EPS statement, which has a leveraged impact to the downside, people are going to start to say, look, this stuff is hopelessly overvalued. If we also look at the fact that bonds are not really money good, if you can, in essence, print the money to pay people back, then at some point the buying power of that money is going to really unravel. And we're getting very close to that point, in my view, because we see not only the Fed, but the ECB, the Bank of Japan, the Bank of England, Bank of China, everybody is saying, look, we're going to throw monkey wrenches into demand and supply. We're going to print money like there's no tomorrow. At some point, you're going to have a levitation of the money multiplier. In fact, Kenneth, we currently have a topping off in the Fed balance sheet, but M1 and M2 growth rates year over year are still accelerating. The transmission mechanism is a stabilizing M1, a stabilizing money multiplier, or an increasing money multiplier, meaning consumers for must-have goods and services are starting to be afraid of shortages, of increasing prices. Corporate treasurers that long did just-in-time inventory are now worried for trade war reasons, for coronavirus shutdown reasons, of shortages of parts, which they need to assemble a finished product to sell. So we could have a shift in the desire of people to buy today before it gets more expensive tomorrow, both consumers and corporate treasurers and CFOs. And that will ignite demand, or the money multiplier, which combined with a money base, monetary base, which has just grown incredibly, feeds us into a much higher M1, M2. In other words, you see 20, 30, 40, 50% increases in the broad money base. And yet we have an imploding global economy. So what does that bring you? That brings you 1970s style stagflation revisited, but the growth is likely to be a lot worse, and we're only getting started on the inflation. I think that, in essence, is what investors are going to smell, and we both know that earnings per share are a net present value residual of expected future growth, earnings per share growth. If that gets a haircut and stays down for the count, like after 05, 5 years, right, when we were a lot less screwed up, and at the same time, people start worrying about all this money printing, they might demand a much higher risk premium. And if ultimately you have bonds that also start to reflect the fact that we're either going to have monetary-based inflation or outright defaults, or one or both, they both lead the same direction, we could all of a sudden have a 40-year bond bull market turn. And we don't revert to the mean. We're manic depressive by nature, our behavior. So are markets, because it's us. So we don't go from a PE of 33 and a real yield of -1, or a nominal yield of 0.6 on the 10-year. We don't go back to a normal 15 PE or a normal 4 to 5% treasury yield. We tend to go in the opposite direction. So we go from boom to bust. We used to have 15% 10-year treasuries. Paul Volcker instituted Fed funds rate tough love at 20%. We couldn't afford that now, which drives home my point. All they can really do is print until the system falls apart, because we're not going to revisit sound money We're not going to revisit savers actually getting compensated. And this suggests that with all the debt that we have, the only thing they can do to preserve their power is to print money until it's repudiated. That's my belief.
Dan, it's interesting. We've seen the 30-year bond be one of the best performing assets of the year. And it goes to show what a sort of casino our world has become, the markets have become, right, with the dollar just being printed into oblivion. But yet we have this situation where this that asset, the 30-year bond, I mean, being such a positive return. And it goes to show again how much of a gambling world the markets have become. And I want to touch on gold here. I want to give you an opportunity to touch on gold and gold's performance also in 2020. But maybe start off with bonds, being that great performing asset, and then go into, your thoughts on precious metals.
Sure. Well, what are bonds really? They're a currency bet. If you're out to devalue currency as a answer to your policy on the coronavirus, as an answer to the debt, the misallocations that low interest rates have bred. In other words, a lot of things have been done that otherwise would have never been financed. So we have rampant misallocations. We have redistributionism, both to corporations and to individuals. We have all kinds of issues. So what have we had for 10, 20 years? We used to add $1 of debt. We used to get $1's worth of GDP growth. Then it went south from there. Now we're adding debt like crazy, and we're actually going reverse. Good, given the coronavirus policy response. But the point is, we can no longer increase in any sensible fashion GDP, real GDP or output, by continuing to add debt. Well, then anybody knows that if your ability to repay something depends upon your income stream, whether it's a family, it's a county, it's a state, it's a company, at the end of the day, you become a bad credit risk. And if the answer to that bad credit risk is the Federal Reserve bailing everybody out with money that ultimately will be worth nothing, then where over time must bond yields go to compensate creditors for the ever-rising either default, outright default, or huge monetary inflation risk, where you just generate a lot more money than you have economic growth, starting at the monetary base, kicked out to M1, M2, with a money multiplier that is starting to stabilize because people start to sense this, start to see it. So my view on bonds is that, and they're tied in with stocks, because obviously stocks and bonds are net present value calculations of expected returns and the prevailing interest rate, right? If those head south, that's going to also clobber in sympathy with what I think are going to be drastically lower earnings per share for the long run for the majority of companies. Those two things are going to come down and give us a reset of bond and stock prices. They are tied at the hip. Against that background, it'll be tough to escape the ravages of changing expectations in terms of price inflation at the consumer, at the corporate level. So I think we're going to see people moving, as I said earlier, to buying today before it's more expensive tomorrow. That will feed on itself. And in that world where you're going to answer the questions of how do we sustain a system that is unsustainable, with all the money printing that's going to take place, we had a preview of it in the 70s, right? That's what happened until Volcker stepped in and put an end to it all. What I think is going to happen is bonds and stocks are both going to be marked down substantially in real terms in any case, but I think even in nominal terms as we see them, right? In that kind of a landscape, as we discussed before the interview, there is something called real money since time immemorial, and that's gold and its little brother silver. I mean, the pound sterling was called the pound sterling for a reason. It was silver based. You could go to Persia, you could go to Rome, you could go to Great Britain, you can go to the US Constitution, you could go to a 1964 dollar bill payable to the bearer in silver on demand, right? These are going to be, in my opinion, the place where people are going to flee to at the margin. And because global invested assets number, total net worth globally by Credit Suisse, my former employer, was tabulated recently at 360 trillion. They figure that financial assets constitute roughly 200 billion of that. If we take a look at total gold on a planet, something less than 200,000 tons, about 22 meter cube, the fraction of that is in liquid assets, in invested accounts, in bonds and stock portfolios as a hedge, is roughly 1%. Roughly 1%. Most of it is bonds, then stocks, and then AI, various, private equity, hedge funds, all that. But gold is so small and comes out of the ground so difficulty, and it's in increasingly firm hands, that a shift of just 1%, if you take the world's invested assets, stocks and bonds, mainly bonds and stocks, if it's just a 1% move from 1% to 2, I'm rounding up the numbers, would be the equivalent of $2 trillion in demand for gold. Now that's the rough equivalent of 10 years of gold mining, and it's heading south. You can make the same case for silver, where it's relatively non-existent as far as any kind of bigger accounts that hold any silver at all. And as we both know, a lot of the holdings of these financial outfits on behalf, say, portfolio managers, are in paper gold and paper silver. And whether those really have the actual physical, that's another story. We saw it with Eric Sprott buying 75 million in bullion, silver. We've got such a tremendous coming together of paper money coming into ill repute, being wasted, laid to waste through the printing press. We've got this economic hardship imposed by the diktats issued. And what do we have against all this? We have people that at the margin are going to start to wonder about how high their stocks are valued. In Europe, the stock's 600. It's gained thanks to monetary largesse, the ECB's balance sheet, up 35% in 4 months. Similar story with the Fed, every place else. Well, what's going to happen is that people are going to say the valuations of stocks and bonds are way too high. It's divorced from economic fundamentals. We don't have good return on capital, much less return of capital or purchasing power prospects. So let us at least take a tiny amount and shift it into what has proven to maintain its purchasing power since time immemorial. And if they do that, and by the way, historically, 4 or 5%, right? This is well known in Switzerland. I'm talking to you from Switzerland. 4 to 5% of private wealth was invested in gold with a small holding in silver. Silver was demonetized. We both know the story, but it's been money of the people. What happens? We don't have to go back to 4 or 5%, despite the fact that our world today is 10 times worse than it was when they used to have 4 to 5%, right? From any perspective. But if we just went from 1 to 2, that would account for 10 years of mining output, give or take. And we know that that's not possible. So you have to have a higher equilibrium price. The way that these institutions and people that have investable portfolios can achieve a higher gold and silver allocation is only through a much higher equilibrium price. And that, in a nutshell, is the story. I think that's going to overpower any kind of manipulation, any kind of ignorance, thanks to CNBC, Bloomberg, all these people that actually talk down what they should be talking up for the good of their clients and listeners. This is all going to, I think this is what we're beginning to see.
That's so powerful. Dan, touch on silver, if you would, a little more, maybe as it pertains to the price action we're seeing. We saw gold really lead the way here from its bottom to where it is now. Silver really, in many ways, disappointed people. But up until this week, gold was outperforming silver. Silver has now outperformed gold. So I can't say that anymore. But it's just right there. I mean, it just got to that 2179 high of 2016. It blew right through that.
Yes.
We hit $23. So silver's starting to really get exciting here,
Yes.
but we're still triple digit returns from its all-time high. I mean, what is your instinct? What's your speculation as to what we will see from silver here on out? Does it start to outperform gold in a material way as the capital starts to flow out to the margins?
Yeah, that is a very good question. I think we already are seeing silver outperform gold. If you recall, the silver to gold ratio, I say silver to gold because silver was 120. It took 120 ounces to buy 1 ounce of gold. All right. So for me, if you look at the numerator and the denominator, but that's more of a, pick your poison, how do you want to call it? But let's just say it took 120 ounces of gold at the high point of gold being much more precious than silver, which was 3 months ago, 3 months ago. Now you only need 82 ounces, troy ounces of silver to buy 1 troy ounce of gold. I think we are now in a process, and bright, rich people like Eric Sprott and his intention to buy 75 million, we're going to see more of that. That's my belief. And you said speculate, and you're right. That's all we can do. We know over time value will out, but there's a lot of charades that can be played by central bankers that can print endless amounts of money, that are in cahoots with bullion banks, that can, in essence, create as much paper, silver, and gold as you want. That's what's been working, right? But let me hark back to the silver rush in the Hunt era. That first time silver went up to $50 a share. To make a point, they tried to corner the silver market. And boy, they succeeded to an amazing degree until they were shut down by the fiat currency powers that be. Warren Buffett also had a role in this, as is typical. But here's my bigger point. If the silver market can effectively be shut down by a player, a convinced, steady, relatively powerful, but still small player out of Texas, the Hunt brother enterprise, if they can move and drive a silver price from like $3 up to 50, that tells me volumes of just how small the silver market really is. So if you look at mined output of $20 billion now at a $23 silver price per troy ounce, that's nothing. I mentioned before that global investors have about 200 trillion under management. What happens this time around, where in fact they've been pushing paper silver into the marketplace, fake silver, to drown out the actual price that they carry on the leading exchanges? What happens in a world where we've had 10 years of silver mining production that's lagged total demand by 23%, where we have a prevalence of paper silver over real silver, where it's harder and harder from JP Morgan on down to snuff out price discovery based upon physical demand? If this is like, a dry forest looking for a match, I mean, it doesn't take much. And because it is so small, 800 to 850 million ounces a year, I mean, Eric Sprott's buying 75 million. You take a couple of those, you got bare cupboards of actual physical deliverable metal, whether it's in the United States, whether it's at the LBMA, excuse me. It won't take much to set this off. When we talked in April, you asked me to give you a guess as to where silver could be at the end of the year. If memory serves me, I think I said about $30, $33. Well, we're 4 months later, and we're at 23, and I think true price discovery, meaning physical, all these contracts, Kenneth, and a fine print says that if the exchange, if it's COMEX or LBMA or whoever it is, cannot deliver the physical, then they have an out. They can give you the fiat value of the silver price in dollar terms. Well, guess what? If people want to buy silver, They want to get the hell out of paper money. And if they end up getting rewarded in the midst of a bull market with paper money, and then 3 days later, silver's $4 higher, they're going to start to insist. In other words, I think the paper exchanges are going to self-destruct because they're not money good. That is, they cannot deliver what they promised. And if they can't deliver what they promised, and you thought you had silver, but really you're back in a buck, or back in a pound, or back in a euro, or whatever, then you don't have silver. So they will be repudiated. And if that repudiation will then drive the physical silver market center stage so that you have the actual physical determining the price, not its construct, not its derivative. We've had the tail wagging the dog. The dog is going to sit up and say, sorry, but I'm physical, I'm the boss. This is how we're going to determine a price, and not based on a derivative, which is hundreds or thousands, and where they exchange metal with nothing behind it. In other words, it's a lot of hot air, right? It's a lot of short selling. They can't come up with their future contracts to deliver the physical. This whole thing is a big funnel that I think the increasing money printing globally will bring into its own, and the dynamic of precious metals, scarce metals, demanding physical, I want out of paper, will come together with the shortages that the exchanges have of real metal to drive this thing into the stratosphere. You know, if you took money today and you backed it like historically was backed, 40% gold, right? Used to be silver in lots of places too, including Great Britain for about 600 years. But if you backed money globally, like it's been backed before, where people again trust the money, right? You're looking at about a 40% backing. If you take all the M1s around the world, and you could go on Fred's site and you can total them up, you can convert them into bucks, you're looking at about $33 trillion in global M1. Now, if you take the total reserves, official sector reserves, according to the World Gold Council, right or wrong, so the only number you can work with, you come up with something like 33,900 tons. You turn that into troy ounces at 32,151 times, and then you divide that in to the 33 trillion in M1 as your surrogate for money, all right, global money. You come up with a price of gold that's about $11,500. Said differently, if you want to cover or base the world's money on 40% gold backing, money divided by M1, then the gold price today would be close to 11,500. 2 years ago, it was 10,000, but we're now printing more than ever. And then if you step back and bring this back to silver, we know that silver comes out of the ground today at about 9-to-1 gold. 9 ounces of silver, 1 ounce of gold. But let's say we move to a 50 ratio, 50 ounces of silver, 1 ounce of gold, instead of our 80. Let's take that 50 ratio and let's divide it into that $11,500 gold price, which you would have if the official sector reserves again covered global money at 40%. You're looking at a $236 silver price, all right? That's more than a 20-fold increase from today. I'm sorry, more than a 10-fold increase from today. And I think that's where we're going. And that could be just the opening act, because even if central banks have no choice but to revert back to gold backing, and by extension silver, they might be overwhelmed simply given the huge amount of assets, thanks to all the money that's been printed, that insist that they're not going to wait until central banks again have solid money. They're going to go grab it. They might end up preempting central banks' ability to even buy this at a price that is affordable. So either way, either you have to bring the world's money back on some kind of sound basis, as American Constitution money is supposed to be, or the people are going to demand it that no longer believe that that money is money good. Either way, I think we're going to see massively higher gold and especially silver prices, because silver is going to trend back towards 50, where it was 50 to 1 after it was demonetized. And as silver is really people's money and was money for a lot of empires over time, I think you're going to see silver likely move more in a direction of about 15 to 1, which is what it was when the British sterling held sway over the world for something like 400 or 500 years. So that's, sorry, a long-winded answer, but I see a lot of upside just based not upon some kind of miraculous change in the world, but simply a reflection of where we're at today. In other words, the manipulation and the ignorance all by the wayside.
That is so powerful, Dan. And I like the way you put that. It's not about, speculating. It's just about precious metals catching up to what has taken place, reflecting and efficiently pricing in what has happened. And we've had an issue with effective pricing with precious metals, but the more loss of control we have over the system, the more I believe that price will get priced effectively. Precious metals will be priced effectively going forward here. But my goodness, we had an incredible discussion, and it was a pleasure just being able to pick your brain, Dan, today. But I could have this conversation go on probably another hour. So I think the best thing to do is book you for 2 or 3 weeks from now, if that's okay with you. And we continue this conversation as things start to unfold. I think what we're going to see in precious metals, what we're going to see in the miners here are going to be swift moving. So I think it'll be important to stay on top of this, especially as it pertains to our freedoms. I mean, so many of these things, again, political, societal, or whatnot, it all ties back to our money, whether people like that or not. They don't like to talk about politics, but it all ties into what's going to happen to people's choices, and people's choices to dictate where capital is going to flow. So to that degree, we have to acknowledge it. But without any further ado, Dan, just maybe share some closing thoughts here. And of course, if people want to learn more about you, your YouTube channel, your website, let them know where they can go and what they can expect to find.
I apologize for interrupting you. Thank you. It's dkanalytics.com. I got real creative, first initial of my first name and my last name, dkanalytics.com. My closing thought is this. We all talk about a canary in the coal mine. What is that? If you look at one thing more than anything else as to when this thing is going to get revved up even more, and I think you got to look at the DXY. That is the global exchange rated value of the dollar, because the dollar's ultimate competitor is not the other fiat currencies, but gold, because it's still the reserve currency. We've seen a dollar value measured by the DXY come down by 7% in 3 or 4 months. That could be a slippery slope. If the value of the dollar, I mean, it's already way down like other currencies against gold and silver, and that's speeding up. But if the dollar gives way in terms of the other fiat currencies, then I think you're going to see an accelerated flight into precious metals.
Absolutely. All right, Dan, we'll end it right there. Thanks so much for coming on the show.
Thanks for having me, Kenneth. Appreciate it.